Hello everyone, welcome back to Fundrise Finance. In today's video, I want to go over how much my portfolio made as options income in the month of September. Without any further delay, let's get into it. The month of September was pretty volatile in the markets. The S&P 500 started strong, rising over 4,500, but towards the middle of the month, in fact I would say the last 10 days of the month, is where we saw a steep decline. The market ended below 4,300 by the end of September. That's like an overall monthly decline of more than 5%. So that was a very decent pullback that we saw in the markets. And even in my portfolio, I couldn't do a lot of transactions as much as I wanted. So this is my Google Sheet tracker for the options income. To quickly go over this particular sheet, we see which particular stock we have the options written on, the option strategy, whether it's a covered call or a cash secured put. For the month of September, I only had covered calls. Then when did I open the contract? What are the expiry dates? And when the contract was closed, how many days the whole contract was in trade, so the current price and change percentage. What is the gap between the current price and strike price? And this section is the amount received section where I capture the details and opening a contract. Likewise, the amount paid section, which I complete when I close the contract. Now, the amount paid section, basically the price at which I close the contract is dictated by my suggested sell column, which is nothing but 75%. That's my current target. So if I reach 75% of the premium that I received, I tend to close the contract. Mostly I do. Few people go for 80 to 90%, as high as that, but in fact as low as 50%. So they are happy with 50% profit. Take it, close it, open a new contract. So I am good with my 75% target range. Then we have what is the final profit or loss, what is the amount committed, the collateral, or in fact in this case, because it's a covered call, how much did my 100 shares cost me? Then yield to strike, is like how much premium I'm receiving divided by the strike price. If it's over 1%, then that particular contract is pretty awesome. Then I have return on capital, followed by annual return on capital. Then any comments if I want to capture for that contract. And finally, the after tax profits. So I consider 25% of what I earn as the taxable. So that's just to keep myself honest of how much I've earned versus how much I am owing as taxes. So yeah, with that said, let's look at the trades for the month of September. First, we have trade from Verizon, which was a roll transaction from August that I received $103 for. But eventually, I just closed this contract at $10 because Verizon fell pretty hard in the month of September, eventually netting a profit of just over $92. Then we have a Ford, which I had to roll the transaction, closing out a $6 contract by paying 14 bucks. That's like $8 hit over there. But the roll transaction gave me 29 bucks, which eventually I closed at 10, netting me an overall profit of over 18 bucks. Then we have the Bank of America contract, which I opened at 8 but closed at 10, taking a hit of 2 bucks. That's because bank stocks were getting hit hard in September. So I thought it's wise to close it out than letting it go further down. Then we have Bank of America. The contract opened at 8. I paid 2 bucks more to close it out. That's because in the initial part of September, the bank stocks were having a really good run. I wanted to protect my investment over there by taking a hit of 2 bucks. So sometimes your decisions, the closing decisions have to be prudent. Then here we see a new one on Verizon that netted me over 6 bucks. Then we have SoFi netting me 9 bucks. Then we have Citi, whose contract I opened at 11, but then I had to roll it out, taking an immediate hit of 70. But the roll transaction, which eventually I closed and I netted the profit of 25 bucks almost. And Lucid netting me over 4 bucks. Likewise, Ford giving me a profit of over 18. Then we have a new City contract that opened at 30 but closed at 13, netting me almost over 16 bucks. And a new one on Lucid paying me over 4 bucks. And Microvision. Now this is one of the bummer holdings that I have in my portfolio, which I got assigned at 5 and it's right now hovering around 250. So I'm waiting to get this offloaded. But till then, I just keep writing cold calls and making little income on the side. For this one, so I sold at 4 and bought it back at 1, netting me just close to 3 bucks. Likewise, Medical Properties Trust sold at 8, bought it back at 2, almost 6 bucks profit. And I have a whole bunch of open contracts that will close in early October or towards the middle of it. So overall for the month of September, I made $132.42. an overall capital of $16,135. That's a return of 0.82%. And look at these graphs, we can see June is still the highest month at $667. That was a crazy month where I made over 5% in return. I don't think that's possible again. Let's see what future holds. And look at the returns. It started at under 1%, zoomed slowly up to 5% in June, and then we see a decline of 4% in July, 1.29 in August, and now 0.82%. It looks like a mountain peak. Hopefully, we resume that upward journey very soon and make another high. So let's see. That's what I wanted to discuss in this video with you all. Hope you all liked it. And so I would really appreciate if you could hit that like and subscribe buttons so that YouTube can suggest this video to many more people out there. And that will really, really help this young channel. So until we meet in the next video, let's try to do as much as possible to be financially healthy and keep taking those small strides towards financial freedom. See ya. Bye.